Welcome to today's Explainer. We are diving straight into the incredible business momentum behind a semiconductor equipment company you absolutely need to know about right now, YEST. We're going to look closely at what's actually driving the recent frenzy around this stock, breaking down some pretty complex market dynamics into a clear, easy-to-follow journey.
So picture this. Top analysts are suddenly pushing the target price for this underdog stock up to a staggering 48,000 Korean won. I mean, that is a massive jump. To understand how on earth we get to a number like that, we really need to break down the mechanics behind their recent strategic victories and look at the shifting landscape of global tech manufacturing.
Here's our roadmap for today. First, the rise of next-generation equipment. Second, the tech competition between YEST and HPS. Then, we'll cover recent massive orders and patent wins, followed by a projected 2026 financial turnaround. And finally, we'll run through the core pre-investment risks you need to consider.
All right, Part 1, the rise of next-gen equipment and the push into the HPA market.
Now you might be wondering, what's the actual technology driving all this market excitement? It's called high-pressure annealing, or HPA for short. Think of it as highly advanced semiconductor equipment that's specifically designed to remove microscopic interfacial defects. And here's the kicker. This isn't just some optional, nice-to-have upgrade. It is literally an absolute necessity for producing next-generation memory chips. And YEST, well, they are aggressively pushing into this incredibly lucrative space.
And let me tell you, the broader financial market is absolutely noticing. Just look at the recent moves. On June 17, 2026, Eugene Investment and Securities slapped a massive 48,000 won target on YEST with a brand new buy rating. That completely crushes the previous average target. Meanwhile, leading investment and securities upgraded their target to a very healthy 35,000 won. Both of these firms are banking heavily on YEST's HPA potential, especially as global semiconductor giants relentlessly ramp up their capital expenditures. Moving on to Part 2, the tech competition between YEST and HSPS, the challenger versus the incumbent. So, to capture that massive market, YEST has to go toe-to-toe with the reigning monopoly, HSPS, and the engineering contrast between these two is just stark. YEST equipment processes a whopping 125 wafers at a time using a direct rotating door mechanism. That makes it perfectly optimized for high-volume DRAM and HBM memory production. On the flip side, HSPS's architecture relies on a cylinder and external rotating ring, which structurally limits it to just 75 wafers. That makes HSPS much better suited for high-mix, lower-volume foundries. This exact engineering difference, that's the secret sauce allowing YEST to directly target those massive memory manufacturers.
Part 3, massive orders and patent wins, clearing the judicial hurdles.
Look, having superior tech is amazing, but actually executing it legally and commercially, that is where the real battle is fought. Late in May 2026, the Patent Tribunal made a truly monumental decision. They invalidated HGSP's Core 303 patent and officially recognized YEST's non-infringement. Talk about clearing a massive roadblock. And YEST didn't waste a single day. By early June, they had already locked in 35.2 billion Korean won in new semiconductor equipment contracts, including some really significant orders for their neocon systems.
And adding some serious fuel to this operational momentum is a classic signal of internal confidence. On June 10th, right after securing those massive new orders, CEO Jang Dong-buk actually stepped up and increased his personal stake in the company by 0.29%. You know, when leadership puts their own personal wealth on the line like that, it sends a crystal clear message to the market. They have absolute, unwavering confidence in their strategic direction and those impending product launches.
Which brings us to Part 4. The 2026 financial turnaround forecast, projecting massive financial upside.
So how does all this strategic execution translate into actual cold, hard numbers?
Well, we are looking at a projected jaw-dropping 645% year-over-year operating profit leap for 2026. Analysts expect them to scale from a relatively modest 3.8 billion won in 2025 all the way up to a potential 28.3 billion won in 2026. This is a foundational, massive step change in their earning power, and it's based entirely on this newly unlocked market access.
Let's track how this revenue is actually going to materialize across the calendar. The year is expected to follow a classic Korean market pattern known as 승소하며, which basically means starting steady in the first half and just booming in the second. Q1 builds a solid base with their existing chiller and neocon products. By Q2, those massive 35.2 billion won Juno orders start hitting the balance sheet. But then, the real explosion happens in Q3 and Q4. That's when the first batch of their 125 wafer HPA memory revenue officially hits the books, and they're expected to bring in about 11 billion won from that single highly profitable line alone.
Finally, Part 5, Core Pre-Investment Risk Check. Time for the reality check.
All right, we need to pump the brakes for a second because no investment thesis is without its vulnerabilities. You absolutely must exercise caution here. First up, high valuation risks. Because 2025's earnings were relatively weak, the current price-to-earnings and price-to-book ratios are incredibly elevated. Basically, the market is already pricing in all that massive 2026 growth we just talked about. Second, and this is crucial, verification is absolutely necessary. This entire bullish thesis completely hinges on YEST proving those second half 2026 HBA deliveries without a single hitch. Any technical hiccup or delivery delay, that could easily trigger a sharp market correction.
Ultimately, the stage is beautifully set for a massive technological disruption in the semiconductor equipment space. YEST clearly has the superior 125 wafer tech, they have definitively won the patent war, and those initial orders are already flowing in. But the pivotal question you have to ask yourself remains, will YEST's second half 2026 reality actually match this soaring market hype, or will execution delays trigger a crash?